चलो तो today we will complete income from house property. I'm I will tell you where you have to mark that adjustment in your separate notebook or on a separate page of HP. Okay. So first this adjustment. If question is given municipal taxes allowed, you have to allowed on paid basis, not on due basis. If question is saying that municipal taxes are due but are not paid by the SSC, then it is not allowed from you do not have to deduct it from GAV. If for suppose if you are not paid in last year but you are paying in current year, so if you are paying in current year, so you have allowed that much municipal tax in current year. Okay, most important just regarding the municipal taxes. Okay, then most important calculation on JV. Once you have calculated the JV, everything is simple. First, how you should find JV? Expected rent or actual rent, which is high, it will be the JV. Now, question is how we will calculate expected rent. So I have make a memory trick for this. First, you have to calculate higher of FM. FM financial management because it is higher syllabus. So fair rent or municipal value which is higher. Then lower of SM. You don't have to consider M here as municipal value. Okay, market. Okay, you have to consider lower of whatever you get the higher of FM, and then whatever the amount comes here you have to compare it with SM. This is our M. Okay, and lower of SM. Okay, then whichever is high will be the our GV. Because why expected and actual rate which is high? Because government want more tax. If you are taking actual rent lower, it means you are evading any rent amount. Okay, then there are some cases for calculation of GV. If income of house lying vacant for some period, it is lying vacant, not self-occupied. Okay, so first case. Then how you should calculate how you should do the calculation. First, you have to calculate expected rent by this FM, higher of FM and lower of SM for whole year. Okay, and then calculate actual rent for let out period. Important, you have to calculate only for let out period, not for the whole year, only the let out period. For suppose it is 9 months, you have to calculate actual rent of only 9 months and compare which is higher will be our GAV. Okay, for example, actual rent is and the expected rent is given for 12 months, that is 2.4 lakh, and actual rent is 35,000 per month, and there is vacancy. It does not mean that it is self-occupied, it is vacant. Okay, so actual rent will be 35,000 into 9, 3 lakh 15,000, and expected rent is 2 lakh 40,000. So here expected rent is actual rent is more than expected rent, then JV will be our actual rent. Okay, then most important case, if actual rent is lesser than expected rent because of vacancy, because there is some vacancy in that property, that there is the landowner is, the property owner is not finding any tenant for that property, it means it is vacancy, then GAV will be actual rent. Let's take an example. This example will come in your exam. Okay, like same this type of example will always come in exam, either in MCQ or either in descriptive question. For example, what will question give? Expected rent. If not given, then you have to calculate from higher of MM and lower of SM. And then actual rent is 25,000 per month, and there is vacancy of 3 months. It means 9 months it is let out and 3 months it is vacant. Then actual rent will be 25,000 into 9 months, that is 2,25,000, and expected rent is 2,40,000. So we can see that expected rent is higher than actual rent. Then you will consider that it is a. Then we have to consider expected rent as GV. Then here your question will go wrong. If there is no vacancy, for suppose if there is no vacancy, there are 10 for a whole 12 months, but there is some because of vacancy the actual rent is lower. So in that case, 25,000 into 12, what will be our actual rent? It will be 3 lakh, but because of vacancy we are declaring lesser income in our income tax. So in that case, government allows GV equals to actual rent, that is 2,25,000. And situation 3, if expected rent is 2.4 lakh and actual rent is 18,000 per month and vacancy is for 3 months. Okay, so it is an example that where the even in the including of vacancy plus actual rent, their sum total is less than actual expected rent, then in that case JV will be expected rent. Okay, and then there is one more case, case B. Calculate expected rent for whole year. Okay, you have to calculate expected rent for whole year, and then you have to calculate actual rent for let out period, and J will be higher of expected rent and actual rent. Okay, here's are some example. Expected rent is 2.4 lakh, actual rent is 26,000 per month, and property is self-occupied for 3 months. Most important, it is like it is sum up of 2-3 adjustment. Okay, and property is self-occupied for 3 months. So what will be the actual rent? 26,000 into 9 months, 2,64,000. Here same expected rent, actual rent which will be higher, 2,40,000. Here is the catch. Okay, this is important. Expected rent is 2.4 lakh. Actual rent is 28,000 per month. Let out period is 7 months. And property is self-occupied for 3 months, and there is a vacancy of 2 months. Then actual rent will be 28,000 into 7 months. Actual rent 1,96,000, and expected rent is 2,40,000. If there is no vacancy? Vacancies of you will consider it 5 months, but you don't have to do this 5 months. The property is vacant only for 2 months, okay, and rest 3 months it is self-occupied. Then if there is no vacancy, what will be the actual rent? 20,000 into 9, if 2,53,000. And what will be our GV? That is our actual rent, not our expected rent of 2,40,000. Okay. Most important part is that you have to consider this vacancy of 2 months plus 7, only 9 months, not that whole 12 months. Okay. And then there is one more case, self-occupied property, unoccupied property. You have to consider maximum 2 HP as self-occupied property, and rest all the property is deemed let out property. Okay, so what will be the GAV? GAV will be nil for 2 houses, because GAV of self-occupied property is nil because there is no rent received on this self-occupied property, and deduction of municipal pay, because NAV will GAV and NAV both are nil. Okay, GAV and NAV both are nil for the SOP. Okay, but if there is any interest on capital borrowed, for example, we had borrowed some capital. So we had borrowed some loan for that property, and if whatever the interest is charged, not the loan amount, interest amount. Make sure you don't have to confuse in the exam. If that loan is taken for the purpose of construction of the self-occupied property, then maximum 2 lakh is allowed only in old regime. Okay, and if there is like the repair, renovation expenses, then maximum 30,000 is allowed. Okay, but in new regime, interest on capital borrowed is not allowed. Okay, so you have to remember, income of self-occupied income from SOP in new regime is always nil, but there is one exception of that pre-construction interest. Okay, case D, if there are more than 2 self-occupied property, then take any 2 houses as SOP, and then remaining houses will be deemed to be let out. Is JV, what will be the JV of that deemed let out property? Their JV will be expected rent, because there is no actual rent received on that SOP, but for the provisions of income tax we are considering it as deemed let out property. Okay, so how you will calculate all consider all houses to be deemed to be let out, take everyone expected rent, and then consider which is the lowest expected rent, and consider all houses SOP. Then you have to determine which SOP is giving us less loss from HP. Okay, then create a combination of 2 houses where you have to keep 2 houses as self-occupied property, and rest all are deemed to be let out. You have to choose the best combination, lower income or higher loss. For this, this is the most important adjustment. It is better that you have to solve 2 to 3 questions of this point. Okay. Then catch up. Part of the house is if part of the house is let out and the other part is self-occupied. For example, first flat is let out and our ground floor flat is self-occupied. Then how you will calculate the let out portion at that first floor? Then expected rent shall be computed for part of property let out property. For example, there is 100%. So 50% let out and 50% self-occupied. Then in that case, 50% of expected rent, 50%, not 100%. Some people, some aspirants had done this mistake, that they had not considered expected rent as 50%. They had taken 100% in the exam. You don't have to repeat that mistake. Okay, and municipal taxes are allowed at 50% only for property. Okay, and interest on capital borrowed shall be allowed for part of property of let out. 50% is allowed. Okay, 50% of interest on capital borrowed is allowed, because for self-occupied property, interest on capital borrowed is not allowed for old regime, and in old regime maximum 3 lakh to 30,000 or 2 lakh is allowed. Okay, we have to keep it mind. Okay, for self-occupied JV are always been in. Municipal taxes paid is not allowed, or whether 50% is remaining, it has not been allowed here, and they will be net. Interest on capital borrowed shall be allowed for part of property of self-occupied only under 30,000 2 lakh, not allowed on new regime. Okay, what is the treatment of unrealized rent? Okay, one of my friend had asked this doubt. Okay, so I will explain here it in more detail. Okay, if actual rent shall not include unrealized rent. If there is any unrealized rent given in the question, when you don't have to include in the actual rent while you are calculating that actual rent of 9 months, and there is for 2 months there is unrealized rent. Okay, when there are some four conditions which you have to fulfill. That tenancy is bona fide. Question will tell you that tenancy is bona fide. Okay, then you have to remember that unrealized rent provisions. Okay, most important adjustment where I say used to play here. Okay, in when you read the word tenancy bona fide, then you have to automatically read that the SSC had any defaulting tenant vacated her HP, that tenant had vacated that HP. He had not been there even if there is unrealized rent from that tenant, and tenant is not in occupation of another HP. That if the tenant has occupied any another HP of that same SSC, then it will not you have to include in actual rent. If tenant had occupied another HP of the SSC, or had not vacated the HP of the SSC, then you have to consider unrealized rent in actual rent. Otherwise, actual rent shall not include unrealized rent. If actual rent is including unrealized rent and all the four conditions are satisfied, then you have to deduct that unrealized rent from the actual rent. Okay, and the legal steps are initiated. Okay, if 4 points are given, then you have to consider then you have not to be included in actual rent. Okay, tax liability of arrear rent or recovery of unrealized rent. If you have recovered any unrealized rent, then what will the treatment of question is straightforward. It says there is some recovery of arrear rent and recovery of unrealized rent. Then what you have to simply take that there is 1 lakh recovery of unrealized rent. Then you have to simply minus 30% of standard deduction from NAV. Then that will be your total income under that HP. Important. If unrealized rent or arrear rent shall be taxable in year of receipt under HP, irrespective HP exists or not. Most important, that question will say that HP is not existing and the unrealized rent is receiving. Your mind saying, oh, that if there is no HP, then how will tax it in the income under head HP? You have to tax unrealized rent and arrear of rent in HP under head. Okay, and then most important, interest on capital borrowed. For example, loan was taken on 15/7/2001 and construction was completed on 25,000. This is pre-construction. Okay, pre-construction interest. Okay, then for example, a loan was taken on 15 July 2021 and construction was completed on 25 April 2024. In this case, interest for period mark the important period. Okay, 15th July 2021 to 31st March. Sorry, I had done some error. 31st March 2024. Okay, not 25 April 2024, up to 31st. It means up to 31st of previous year. Okay, shall be accumulated allowed in 5 installment from 5. You have to allow in 5 installment, not in the first, not on the first year. Okay, you have to allow this interest in 5 installment. And if current year interest is allowed on same previous on due basis. Okay, interest is allowed on due basis. Interest on unpaid interest. If there, for example, you have taken a loan for the interest amount and you have not paid interest, then it is not allowed. If you have taken loan from outside India, then interest must be deducted only. Interest you have to allow to deduct TDS only if there is TDS is deducted. How question will like confuse you that some loan is taken from India, some loan is taken from outside India. Indian loan had not deducted TDS, no problem. But if loan is taken from outside India, that you have to check that TDS is deducted or not. If TDS is not deducted, interest is allowed. If on Indian loan TDS is not deducted, even though the interest is allowed. Okay, interest on capital borrow is allowed of as a property only under new regime. That pre-construction interest. Okay, this one is pre-construction interest. So interest on capital borrow is allowed of as a property only under new regime. Under old regime, interest on capital borrowed of pre-construction interest is not allowed under old regime. Only exception under old regime. Okay. What will the treatment of co-owned house property? If co-owned property let out, if co-owned property is self-occupied. If co-owned property is let out, then what you have to do? Like when we go to restaurant, then we one person take all the bill, and then we have to divide the ownership, right? That how much bill we will split 50/50, 40/60. Okay, and for SOP property, and then we will always be nil. And this is the most important, that interest on capital borrowed of 30,000 and 2 lakh allow only in case of new regime to each SSC. each owner, most important, market each owner, not for calculation, not total calculation of 30,000 or 2 lakh, but if there are two assessors, then you can claim on reback 60,000, and for construction you can claim up to 4 lakh. Okay. Then there is some demonetization concept which we will cover in clubbing. There are two provisions. Like in one case, for example, Hardik and Natasha is there, and Natasha is living apart from Hardik under an agreement. If Hardik had transferred any property to Natasha for inadequate consideration, and there is a written agreement that they are not living together, so in that case, Natasha will be the owner of that HP even if it is without consideration. If they had not done any written agreement, the who will be the deemed owner of that property, that is Hardik. If there is a written agreement and Natasha is living apart from Hardik, then in that case, even the Natasha is paying inadequate consideration, the income from that HP will be calculated in the hands of Natasha. And there is one more treatment of amenities. You will see one or two questions hardly of amenities, but IC's favorite question, it will ask an RTP, MTP. Okay, if SSC is in the business of letting out the HP, then the amenities portion is taxable under head PGB. If SSC is not in the business of letting out the property, letting out HP, then that amenity is taxable under the sources. Only that rent amount is taxable under head HP and not amenities. And what are amenities? Like with flat you are getting furnitures and other like sofa, furnitures, another RO. These all are called as amenities. If you are getting, it means in the hands of the land of property owner, that amenities portion will be taxable under head PGBP if it is in the business, and if it is not in the business, then in that hands of landowner, it will tax you under head other sources, and the rent you are paying for that property only, not for the amenities, it will be taxable under head HB. I hope it will be so helpful for you, and I cover every adjustment. I tell you every step by step how to solve each question, and important points. Okay, and that higher of FM SM lower. Okay, I hope it will be so helpful for you. Thank you so much guys, and here we completed our income underhead.